Hello, Accounting 220. This short video will recap Chapter 1. I hope you've enjoyed your first week of class and you're ready to work hard at learning how to record and communicate accounting transactions. So what is accounting? It's the system we use to record and communicate all of our business transactions. We're going to focus on corporations in this class, so they are required to follow the GAAP, Generally Acceptable Accounting Principles. They are not laws, but you can be prosecuted by the SEC if you do not follow them. So first of all, the standards and the rules are required for all corporations, so that's what you're going to learn in this class, those standards and rules. How are we going to use them? You're going to use them to measure a company's financial position and then communicate that information to your external users, your investors and creditors. So now we're going to talk about the main accounting equation that we use to measure and communicate our financial position. The next part of the video, we're going to refer to our accounting equation and explain each element. Assets equals liabilities plus equity. Assets includes all of our items of value, resources, things you can think of that a company owns. So it's going to include cash, equipment, machines, property, land, accounts receivables, anything that has future value. Next, liabilities, all the accounts that relate to the things we owe on. It will mainly be referred to as your payables. And then the equity column in this class is going to cover two main equity accounts for now. Common stock is your external ownership. When shareholders buy into your company, you would give them a stock certificate. And the internal organic worth of the company, created by months, quarters, years of being profitable, is the retained earnings account. That's the internal ownership. So really our accounting equation says, what do you have? And the other side, where'd you get it? Who can claim it? Who owns it? So if you have a car, but you owe the bank for that car, your accounting equation would say car on this side, and then it would have a notes payable on the other side for the same amount. As you pay off the car, in theory, your liabilities get reduced and your car doesn't go away, but you have more equity in the car. You have more internal ownership and worth that you can claim. So we really need to get a good grasp on each of these main elements of the accounting equation in order to master our recording of transactions. So I strongly suggest you look at what accounts go into what categories, and there's a great reference in the back of your textbook. I'll post a picture of that on this video, but right now I just want you to learn all the different elements, their definition, and the accounts that go into each. So assets, the stuff that we have, the things of value; liabilities, what we owe; and equity, what we own. So please refer to this often.